Is the trailing drawdown the silent assassin of your prop firm dreams? You're not alone in that. This single rule has crushed more trading accounts than any market crash.
It's a bloodbath! We're ruined!
But what if I told you there's a way not to just survive it, but thrive despite it? Stick around because we're about to decode this prop firm killer once and for all. Most traders think they understand how trailing drawdown works, but in reality, they don't. So let's break down exactly how trailing drawdown works, and this is really going to be a unlock for you in your trading. So where most people go wrong is they think that trailing drawdown is always trailing you. But in reality, it's not. It is only when your account balance is at a new high. And I've actually created a tool to help represent this to you guys, which we'll go to in a second. So here's the tool that I've created to help show you guys how trailing drawdown actually works so you actually understand it better. When we take a trade, right, our account equity is at 50,000. And then this is where I want you guys to really be focusing on is the high water mark, the at the high balance of your account. Because if you don't keep track of this number, it can be detrimental going forward. So let's imagine that we win our first trade. Boom. And we get out at the exact high our account balance was, right? Because our balance was at an all-time new high when we were in this trade and it went up to a high water mark of 50,500, our drawdown is going to come up. The floor of our drawdown will come up. So we made $500, so the max loss we can have going forward also comes up $500. So let's go ahead and just pull this up. And as we go up, so does our drawdown. You see the drawdown floor here coming up as with the balance, right? Pretty easy to understand. So now let's say we take a loss. Now I'm gonna try to like make this pretty dramatic here just to show you that it stops, right? The drawdown floor stops as your balance moves down. But now what about when we start going back up? See how it's still remaining flat? And the amount of drawdown that we can lose stays flat during this recovery period. So a lot of traders don't get this. They think that during the recovery period here, the trailing drawdown is activated. I think I'm the only person I've ever seen bring this up, that when their balance went from here to here, the trailing drawdown is not active, right? So you can let your trades run in this period. Let them run, just trade like you normally would. And it will remain flat until we get back to above the 51,200, the high of the balance up here. So we go forward and now we should see it start moving forward. So see how it's now starting to ratchet up because our balance has reached an all-time new high. This should really help a lot of you guys because you're going about your trading all wrong in the trailing drawdown accounts. You're assuming that it's always active and you always have to adjust your trading, which in the next part, I'm going to go over and give you guys some trade management strategies that are really going to break trailing drawdown from ever affecting you again. It's going to break you out of this trailing drawdown box that you're stuck in because a lot of you guys are letting it really affect your trading when you don't have to, because it doesn't have to be that big of a thing. So you can see here we finally passed the evaluation, but you can see here how it remains flat and then up. So we're actually going to be going over a trade that I had taken live on stream in this example. I want to go over how you could have traded this move down, and I'm going to show you how to utilize trade management to overcome trailing drawdown. So let's go ahead and go into that section here. So when we're entering a trade with trailing drawdown activated, right? That means my balance is at an all-time new high. The first thing I do is whenever I'm watching my balance go up and down, I'm always tracking like was the highest watermark of my account balance. Like what's the all-time high in my account? So for example, we'll say that in this pretend account that we're trading, it would be 50,500. That's my all-time account high balance, right? So anytime I'm above, my balance goes above this, I need to be paying attention. So let's just imagine that I begin this trade at the all-time high of my balance. So I'm gonna be really focused on a couple key things here. Number one is scaling out. Scaling out is probably the easiest way to mitigate risk and trailing drawdown risk in a trade. So let's go ahead and play this forward here. So trade starts go my way, right? If I'm risking 400, whatever it may be, we'll get into risk management a little bit later, like how much you should be risking per trade. In this example, let's move this down to where I would probably actually be comfortable risking, which would be around $250 per trade in a 50K account. And again, I'll explain to you why that is here in a little bit. So if I'm in a trade and immediately I'm seeing a profit of $870, but I'm only risking $250, I know that I'm already over a 3R trade. That's a really good trade all by itself. So what I would do in this example is I would exit one of those contracts. So if I had two short, I'm going to buy one back. Boom. And then now this reduces the amount overall. Instead of it can come back against me 800 and then that ratcheting's in effect. Instead of the ratcheting be 800, I've reduced it to the max it can ratchet against me is 435. So I want to make sure you guys understand this. So if you're in an account and your balance goes up $800, the trailing drawdown, whether you take profits or not, is going to ratchet up with you, right? So the problem is that like your balance is at $800 plus 800 here, and you don't take profit, it creates this smaller space. So here at all-time high, between your account balance and your trailing drawdown, you had $2,500, let's say. But if you go plus 800 and you let it balance come back down, it essentially removes $800 of drawdown I have in the future. The only way to prevent this is scaling out and exiting at the most profit you have. So this will decrease, if I exit one contract, it will decrease the amount that this can ratchet up against me by $400, right? So like, let's say it went right back up to where my break-even price was, the max that it ratcheted up on me would be $430, right? Because I've already taken profit, I've already guaranteed that my account balance went up $430. So now after taking profit, my balance would be $935 banked. That's in the bank. That can't come against me, but my account balance at this moment that is not booked profits, it currently sits at 51,335, but I have a guaranteed balance of 50,935. Hopefully that makes sense to you guys. The problem with trailing drawdown is it's going to affect you in a couple different ways. And the major way that the prop firms hope it affects you is they hope that you cut your trades early and you don't let your winners run, right? They create a trailing drawdown because they know everyone's been taught to let their trades run, right? So if they want you to fail, they want to mess with your stats. They want to ensure that you're not getting large risk to reward trades because they know large risk to reward trades is how we win. If you risk $200 and you're able to make 1,000, that's a large risk to reward trade. You risked a little to make a lot, which that's how as traders we make money, right? So how do I do that with trailing drawdown, right? That's the issue. That becomes, how do you allow your trades to run while also not allowing a trade to come back against you? So you have to have trade management rules in place, a dynamic trade management style. This is important, a dynamic trade management style. You can't assume that if you set a limit order down here, that price is going to get there. Like, well, if it goes down close to it but doesn't trigger it and you watch it come back, your account's toast because there's trailing drawdown. So what I am going to teach you here is using a strategy called one time frame exiting. So on a lower time frame, a 30-second, 1 minute, whatever time frame you choose, we're going to look at candles in a row, right? So if we're in a short trade, we're going to stay in the trade as long as we see it not go above the previous candle's high. Now we would stay in the trade until the previous candle's high is taken out. So that's the previous candle there. We don't have to worry about that, but we do have to worry about this coming up pretty high there. So nice there. We would exit right as price breaks above that candle for more than 5 seconds. And if we go ahead and exit the trade, boom. Now, if we looked here, this allowed us to 1,200 on the second trade and plus 435 on the first trade. So that is plus $1,700 just about in one trade. Let me show you guys one more example. So let's say I wanted to enter in on this on a failure swing of this level. I'm gonna go ahead and enter short there, put my stop up there. I'd probably do this in a micros account because that's too much risk there, but for example's sake, we'll just go ahead and go with it. So then if I go forward here, I'm gonna stay in the trade as long as it doesn't take out the previous candle's high. But again, if I risk 680, I want to be taking one off here soon because I don't want the trailing drawdown to ratchet up. So I'm going to go ahead and exit one contract, which I'm not going to break all that. We already broke that down, why that's important to do. Then we'll just stay in this trade as long as it does not take out the previous candle's high. So right now, if the candle's right there, we need to be watching this candle's high. There's the next candle, so we'd watch this candle's high here, right? It's always a previous candle. Okay, so now we'd watch this candle's high. And now see how this allows you to stay in trades and catch the big moves that the prop firms don't want you to be able to catch. Because this is their nemesis, right? There's a reason that they came up with trailing drawdown. It's clear as day to me. They don't want you to have big risk to reward ratios because they know that's how we win. So you have to implement a dynamic trade management style that allows you to catch these big moves while also mitigating trailing drawdown. So then we would cut our trade there because it went above the previous candle's high. That candle above that candle's high, we exit, and then we make another $2,300. So in those two trades, we would already pass this evaluation and then some without giving back really much, right? So a risk rule that I stand by is you should never be risking more than 10% of your drawdown. This allows you 10 losses in a row, not accounting for trailing drawdown, but allows you at least 10 losses if everything was the same. So any less than that, you're pretty much guaranteed to blow up. You may pass the valuation, but you're going to blow up the funded account after you get it past a certain amount of trades. It's just a given. So if you want to be successful in this prop firm trading game, you have to risk less than 10% of your drawdown. And that's the max, right? So the problem is people be like, oh, if I have a 50K account, I can risk 1% of that, right? But that's not really your account size. That's just the account that they're calling it, right? So there's a big issue with that, using that kind of logic. It's not like a normal. It's just not. You have to base it based off your drawdown period. So if you guys want to check out my website, it's verifiedfundingcompanies.com. I have the best discounts in the game with companies you can actually trust. I actually have a couple new companies I'm going to be adding, but these 6 companies here, I guarantee their payouts with. I would trust them 100%. They are the best prop firms in the game. So Bullnox, Take Profit Trader, Trade Day, Tradeify, Day Traders, and Apex are, in my opinion, the only prop firms you guys should be trading with right now. The link to my website is in the description. And I also have a Discord where I do live trading almost every single day of the week. Why I believe this is such a great Discord is because I've created a real community with not just new traders in it. Like, the problem I didn't like about a lot of Discords is that they ended up just being a beginner trading farm, right? So I've created a way that experienced traders will stay. If you get profitable after joining the Discord, I give you access to the paid section for free. It ensures that traders remain in the Discord. So I ended up calling out this move here, right here, call long, ended up going up 200 points. So I do call outs, analysis, live trading, which that's where I think you should learn from me, is when I do the live trading. So every day, either at the New York opening or Asia, I go live. And I don't hide anything from you guys. I give you 100% access to see my charts, my trades, my entries. You can ask any question you want. And I also do this for free for the entire Discord. So you can join my Discord for free. And then come on Tuesday, get access to me in that live stream that goes for an hour to 2 hours. Ask me any question you want, right? So I think the value there is huge. You really have no reason not to join. So I highly urge you guys to join. The link is in the description. Again, you have no reason not to. So I'm going to put up a couple videos here on trailing drawdown that you can watch further and learn further about how to beat trailing drawdown. Check them out. And I'll see you guys in the charts. Peace out.